Hey guys, it's a market update. In this video, we're going to be looking at the next phase of this bull market, the second phase of this bull market. I believe the first phase has now been and gone. You've had the ETF pump and the halving pump, right? That was this big move. But the second phase is the government intervention, central bank intervention phase, where Bitcoin usually has these absolutely insane moves to prices never seen before, right? And so what's going to drive us there? Is it going to happen this time, and what is the extent of that? We'll look at some data in this video to kind of go through that. As of right now, Bitcoin, I think, is in this just consolidation. So Bitcoin doesn't move like anything else. When it moves, it really just re-rates. But between that, it's kind of super boring. Everyone loses interest. It goes sideways and, no one really cares. Well, I think we might be in that phase right now, just waiting for the central bank stuff to kick in, which is probably towards the latter half of this year. I think the sweet spot is to invest in assets that have secular growth, which Bitcoin does, during times when the narrative or the attention has shifted away and prices are soft. That's a sweet spot of actually making money or trying to make money with investments is, prices are soft, but what's coming. And so that's where we are right now. You can see a red candle probably for this month, even though we've come way off the lows. We came down to like 60K. We've kind of bounced off of that and been bought right up into this level at 66, 67K. So I think it's consolidation. I wouldn't really call it weak price action, consolidating pretty much at an all-time high. You can see we're still in the green box, which I think is necessary as a kind of stepping stone to the next phase when that comes. It won't be Bitcoin now. It's going to be the central banks and how they control things. If you do trade though, check out Bybit. I trade on here. You can get a deposit bonus up to $30,000. Just take the link down below, make a deposit and trade. Most of the data is showing us that we're still very early in this Bitcoin cycle, and that means the crypto cycle as well. Crypto or kind of alt season usually happens towards the latter stages of a Bitcoin cycle, which may be coming towards the latter half of this year, maybe early next year. And that usually takes place when you get this big expansion in liquidity from central banks, essentially currency debasement. So we know by now that essentially what's happening is governments have way too much debt. It is literally impossible for them to pay it off. And so the way that they try and rein in some of that debt is by printing money from the central bank to buy back the debt. That essentially socializes the debt across every member of society equally. And this annualized growth rate is about 8%. So they're debasing the currency, printing more currency units at about 8% a year. And that's a tax on all of us of 8% through the purchasing power of our money going down. This is the dollar. Other currencies are much worse than this, of course. So 8% a year we're paying as a tax, essentially to try and rein in the debt creation and the interest on the debt, which is impossible. So this will only continue. Now you can see it moves in waves. And when they print a lot of money, that's when you get big rises in asset prices. So is the price of that asset actually going up? Or is it just that the currency has been debased? Therefore, there are more currency units chasing the same amount of assets. And so the price of the asset has to go up to reflect the fact that there are more currency units. That's what's actually happening. So if the asset that you're invested in isn't going up by at least 8% a year, plus maybe a little bit more for GDP, actual GDP growth, or, just kind of price rises or whatever, let's call it 10% a year. If your asset isn't going up 10% a year, you're actually losing purchasing power and therefore losing money in the investment. So the liquidity index, you can see it just doesn't go down, right? Well, let's put that onto the Bitcoin chart and you can very clearly see here, this was the 2020 rise in global M2 money supply, global liquidity here, that rise. So this is the West in blue and the East in red. And that coincides with this big move in BTC. So are we going to get that again? Probably not, unless we have some sort of worldwide catastrophe like we had in 2020. But of course, these things do happen every few years. You can't invest for that anyway. But the fundamentals are that currency is being debased. So you have to buy assets. And crypto has the most kind of secular growth, right? The asset class with the most growth. And also technology as well. So it's part of that. So the next phase of this bull market potentially is when governments work with central banks. They're not supposed to, but they really do, right? Because the government needs to raise more debt to pay off existing debt and all the other things it needs to pay for. The central bank wants to make sure that interest rates are the absolute lowest just when the refinancing cycle comes in. So are they going to print money again? Well, for right now, they're not doing that, but they could do in the future. In any case, it kind of doesn't matter. You don't need to try and play the central bank cycles. You just need to get into the asset that, number one, protects against that if it's going to happen, and number two, has enough secular growth that it's outperforming all of this chicanery that happens. And so Bitcoin is clearly that. And if you want a basket of altcoins as well and technology stocks, they're clearly outperforming because they have the actual growth that enables the outperformance for versus the balance sheet growth, currency debasement growth and debt creation growth. Right? That is really the story of our time because every Western nation is pretty much 100% plus debt to GDP. And so this is the only thing that can happen. And so you're really protecting yourself against that first and foremost. Currency is being debased by 8 to 10% a year, but that's not the only thing. This time around in this cycle, we also have the US having one of the largest fiscal deficits ever outside of wartime, essentially. World War II and the global financial crisis, 6.2% of GDP is a deficit, which is debt creation. The reason they did this is after the pandemic, they were just worried that prices would fall and there'd be a big recession. So we know that what they do is they create debt or they just simply print money to make sure that GDP doesn't fall down. So they're pumping stimulus in, creating stimulus and higher prices. Why? Because a huge crisis and house prices falling through the floor doesn't really help anyone, does it? So they'd rather just debase the currency or stimulate by 5, 8, 10% a year, kind of socialize those losses around. But we have the assets and the tools to actually defend against that. In any case, they want GDP higher and they print money to do that. In fact, in a normal free market, you would actually expect the price of a lot of things to drop, right? Because you would never buy the same thing for more money if an entrepreneur invents a way to give it to you for cheaper. And so if entrepreneurs are inventing ways to give you more for less or the same thing for less money, shouldn't GDP actually fall because you're spending less money for the same things? Well, of course, GDP can't fall. They need it higher and they need prices higher in the debt-based system. And so this perpetual debasement of currency and debt creation must continue. And so we must defend ourselves against that. We can see that this is real GDP growth in the States. And with, obviously highs and lows, the trend is downwards. So GDP coming down. Now, you may think this is very bad if GDP is going down. I would actually suggest that GDP coming down may not be all that bad because what this suggests is that the economy is finding ways to produce more for less, and therefore GDP, which measures the output in dollars, should go down in many places in the economy. Some would go up, but many entrepreneurs are going to drive prices lower, which means GDP comes lower, which means your wages don't have to be as high. So you could have lower wages, which means GDP down, price level down, but in the debt-based system, they can't have that. Therefore, they create debt and they print money and they debase the currency by 8% a year to make sure the price of everything goes up. So we've literally got the people that control the money pushing asset prices up. And so let's not fight that. Let's just buy assets that go up in price. So the second half of this cycle, the second half of most cycles has been when the government needs to refinance and the central bank helps them out. So we can see how this works hand in hand. This is Fed net liquidity and this is US government debt. They go hand in hand. So they're almost one for one. So as the government creates more debt, the central bank also essentially creates currency units to buy back some of that debt and try and debase the currency, socialize the losses of the debt over the whole economy and all of the people in society. This is Fed net liquidity against what the federal government in the States is going to have to spend on its interest payments. Now, this is a lot of pandemic spending and huge fiscal stimulus happening now. What's going to happen here? Again, you can see that they are very intertwined in the way that they move, well, we're going to be having a huge debt burden over the coming years. And so what's worrying is that usually in order to print a lot of money, the central bank has to have a crisis as cover to do that, right? So there has to be some sort of drop in the price level or some other slowdown. And the central bank says, hey, look, you don't want to lose all your jobs. Well, we're going to print some money to help you out. Now, what that does is create currency debasement, rise prices further, and so on. But that's the risk of having risk assets, is that you may have to go through that first before the money printing. But I think the volatility is something that we have to accept when the data is so clear that the only thing that can really happen is more debt creation and more currency debasement, which ultimately forces prices of assets higher. So you either stay in this and get wrecked, or you move out into assets that increase at a rate higher than 8 to 10% a year, which is the currency debasement. So crypto and technology are really the fastest horses in this race. And Bitcoin is a macro asset, a completely uncorrelated asset. Bitcoin isn't a business. It's not a blockchain like a smart contract chain, which is really in competition for features and use cases. Bitcoin simply is an asset in itself, and its inflation rate just dropped in half to now about 85, 90 basis points per year. And in 4 years, that will drop again to 40 basis points. And we know that there's a cap on supply, and it's really the only asset on Earth that actually has a physical cap on its supply. Yes, other blockchains do have token burns and everything like that, but they are more platforms and not specific assets like BTC, in my opinion anyway. But as we can see, Bitcoin here, its compound annual growth rate annualizing at around 70% right now. So even just with everything that I've just said, with all of this monetary debasement, and we need to protect ourselves, you just have an asset that's in a growth phase, and it's going to keep like that for probably another 5 to 10 years, where it's just outperforming everything else. Its compound annual growth rate, if you buy the Pico top and everything else in between, you know, you're making 70% a year. And so it's outperforming the balance sheet, it's outperforming everything else. And so, you know, this is the asset class that has that outperformance. And so really it's a question of how much do you want to allocate to this asset class. If you do trade crypto, check out the Bybit deposit bonus up to $30,000, link in the description below. Crypto investor course link down there as well, with 300 videos on getting set up with crypto. I'm James, this is my ZG. Cheers for watching, and I'll see you in the next one.